Good morning and welcome to ForexTV.com's AM Forex New York. Today is Friday, November 23rd. I'm Caitlin Sisney. The dollar headed for a weekly decline against the euro and the yen. On speculation, U.S. credit market losses will prompt the Federal Reserve to keep lowering interest rates. The dollar traded near a record low versus the euro after banks, including Merrill Lynch and Citigroup, said the Fed will cut its benchmark rate by at least 1 percentage point. Euro is trading at 148.09. The yen has risen 2.5% against the dollar this week as concerned global economic growth will slow prompted investors to reduce carry trades, in which they bought higher-yielding assets with loans from Japan. Yen is trading at 107.9. Meanwhile, sterling was up at 205.87. Today, we're joined by David Gilmore from FXA. David, can you tell us your forecast for the Forex market following the holiday?
Hello, Caitlin. I'm looking at markets on this Friday after Thanksgiving, and we had another annual dollar Thanksgiving drop, sort of the turcolepsy, borrowing from a few television shows, but nonetheless, the dollar's under a good deal of pressure off the lows currently, but markets are very convinced the Fed has more easing to go. Credit markets are still in turmoil. Banking system is broken on a global basis. Korean banks are having trouble getting dollars. They're in the spot market buying dollars, selling won. LIBOR sets are higher this morning. I have to think that our focus really should be on credit and less on the macroeconomy. And we're kind of at a new chapter for the dollar, too. The dollar had been strengthening versus the European currencies like the euro and Swiss franc during periods of credit market stress, and now we're seeing the dollar fall versus the yen in this periods of high stress. That's not new, but also it's falling versus the euro. There's no real support coming for the dollar out of the whole credit market mess, and I think that's significant. Just to me that we're going to see the dollar move up towards 160 in the next couple of months, and I'm not sure any central bank can be raising interest rates in this environment. I think we'll see the Fed cut again in December. I think they've got plenty of easing. We might even get an in-between meeting cut because markets are stressed. Equities are falling. I even think the Bank of England is going to be easing soon. Bank of Canada soon. Swiss National Bank won't be raising rates. And in time, I think even the ECB is going to have to cut rates. So all in, I think we're in a very difficult time for capital markets. And I don't think it spells well for the dollar. Thank you.
Thank you, David. That was David Gilmore from FXA. I'm Caitlin Sisney. Join us again for another update right here on ForexTV.com.